So in this video, I will discuss with you NHPC. I made roughly 3 to 4% on this stock in a couple of days. Let me share my screen here. Okay, this is NHPC. I bought the stock on 21st of May. As you can see, the blue line, the green line, and the red line. The blue is the 50-day moving average. The green is the 150-day moving average. And the red is the 200-day moving average. Across all my videos, if you see, it's the same process, same system of identification of stocks that I am using. Price is above all the three moving averages, and all the three moving averages are moving up. So it's a very strong stage 2 uptrending stock. So let me remove these moving averages just to keep the chart clean. Okay. So I bought on this day. Why did I buy here? Why did I draw a yellow line here? So if you see the base started from here. From here, the stock started consolidating. So this is the highest point in the base. What is the lowest point in the base after this point? Here. So this is point 1, point 2. What is the highest point in the base after point 2? It is this one. We are talking about all candles before the breakout candle. This is the breakout candle. So after this is the highest point. After this point, what's the next lowest point in the base? This one, the low of this candle. After this, what is the next highest point in the base? The high of either this candle or this candle. And after this, what is the next lowest point in the base? The low of this candle. So point 1, point 2, point 3, point 4, 0.5 and 0.6. So there are 6 points in the base. Okay. And as you can see, the price is contracting. Even the volume is contracting during the base, which are good signs, which means people are not selling. So the price is contracting. There are 6 points in the base. I need minimum 4 points in the base. I also need minimum 10 candles in the base. Okay. Why 10? Because I need 2 weeks of consolidation. So 2 weeks is equal to 10 candles, 10 trading sessions or 10 working days. So since I have 6 points, then point number 5 becomes my natural buy point, which is the point of least resistance, which is what Jesse Livermore over 100 years ago created that term, the point of least resistance. Even Mark Minervini would consider this tightness as a opportunity. So if I make this into a bar chart, look how tight the closing prices are before this breakout happens. Okay, very important. So I took a position on this day. I bought the stock as it broke the yellow line on the 15-minute chart. So this is a daily chart. So I drew a yellow line at the high of this candle. Let's go to the 15-minute chart, 21st of May. This is 21 May. So see, this is the first candle, second candle, third candle, 4, 5, 6, 7, 8. 8th candle. So at 11 o'clock, it finally breaks the yellow line. Moreover, this same candle also breaks the 1 hour high of the day. So 1 hour high is the first 4 candles. So 15-minute candles, if you look at first 4 candles, that's 1 hour, first 1 hour of the day. The high and low of that 1 hour are extremely important levels. This is called as the morning range. This candle breaks that morning range on the upside. It also breaks the yellow line on the upside. So buying the stock here is a great opportunity. You have to wait till it closes here. Okay. I waited till it closed here. Okay. The moment it closed, my market order went in. So what's the closing price here? 101.30. Let me draw a line here. 101.30. That's my buy price. Near about that, 1 or 2 decimals above or below, that's allowed. So the yellow line is my buy price. So after I buy, what do? I wait for the next 2 candles to see whether I'm getting the follow through. Follow through means when people buy because of 2 reasons only. One is greed and another is fear of missing out. Both of these emotions can drive stock prices up like crazy. So if you look at this candle, This is the first follow through candle. Look at the volume on that candle. 28 million shares traded compared to an average of 4.8 million shares. That too in 15 minutes. So in 15 minutes, somebody bought 28 million shares of this stock only in 15 minutes. Okay, because the price went up. So that's almost, what do you say, 5 or 6 times average volume on the 15-minute chart. Look at this bar here, compare it to the blue line. Blue line is the average volume. So it's a very powerful follow through. So if the first candle itself is giving you a huge follow through, the second candle really becomes irrelevant because it might, this looks like a shooting star, but for me, it's a positive closing. It closes above the previous candle's close. And for me, this represents some consolidation because the price has moved up a lot in these two candles itself. Here it moved up 2.3%. Here it went up 1.43%. So in half an hour, the price has shot up 4%. So it will take some rest here. Okay, so that is how I executed my trade. Now let us go back to the daily chart. So 21st May, daily chart. So once I execute the trade, the blue line is my buy price. Then I wait till the end of the day. I want to see what's the closing volume. Now here, if you see the closing volume is 206 million shares traded. Look here, okay? The green is the actual, blue is the average. So if I place my cursor here, 206 million shares traded in a single day, average volume, which is the 50-day moving average, that's 85 million shares traded. That means more than twice the average daily volume, which is very powerful, correct? So that is why I did not sell here. Okay. Next, again, as I look for follow through on the 15-minute chart, I also want to see follow through on the daily chart, which I get on the first candle because this candle is up 2.5% from the previous close. If you check this number, I place the cursor here, that's 2.57% up, and the volume also is around twice the average daily volume. See, 162 million shares traded, 86 million is the average daily volume. So on the first candle, we get the follow through, but this candle gives you a warning sign because the upper shadow of this candle is longer than the height of the real body of the candle. That's a clue that the market is telling you this is not a proper follow through. A proper follow through has to be a strong, large green candle. So here itself, the market is giving you a clue. I could have exited here, but I waited another day because for me, follow through means two candles. Look at this candle, red candle closes below the previous candle. This is not called as a follow through. It's a weak closing. Weak closing means it closes below the midpoint of the range of the candle. The range is the distance between the high and the low. Okay. So weak candle, so I closed here. So the profit that I made here is from this blue line, roughly somewhere here, and I sold somewhere here. So for a profit of around 3.88%. 3.88% profit in 2 days on a 5% position size is not bad. Okay, I could use that profit to finance multiple trades. If I am taking only 0.5 or 1% loss on majority of my trades because I am checking for follow through on the 15-minute chart, then this single trade has the capability of financing 4 or 5 loss-making trades for me on the 15-minute chart. So that is why, even though this looks very small on the daily chart, but from a trading point of view, in terms of financing my losses, because I am going to have losses in the future. So to finance those losses, I need to book profits. And see, after that, the price continued to go down. And these 2 days were volatile because this was election period in India. But the stock gave a first clue here itself on the first follow through. That itself was a clue that probably this stock is not going to break the high of the base. See, it opened but closed below and it kept going down. Now it has started creating another base. So I will watch out for the stock. See, just because I sold the stock doesn't mean that I'm not going to look at it again. See, if you look at the moving averages, still blue, green, red. Okay, all moving averages are sloping up. The price is above all the moving averages. It is still a powerful stage 2 stock, but it is taking time to consolidate. So I am sitting out. Once it consolidates properly, once it gives me a 10 candle base, once it forms 4 points in the base, I'm going to jump in again into the stock. But this is the story of my trade. See, not every breakout will work. Okay, I would say 9 out of 10 breakouts might fail. But if your average loss on those 9 trades is less than 1% and your winner is 10 to 20%, you still end up making a profit, right? So the normal concept of reward to risk, I don't follow that. What I follow is keeping my losses low. That is why I closely look at the 15-minute time frame, because 15 minutes is enough market for the time to decide which direction does it want to go. Okay, so that's NHPC for you. I hope you understood the trade. I hope you understood why I took the trade, where I took the trade, where I bought the stock, why did I sell. Okay, all of these reasons I have already explained in this video. So if you want to understand it properly, watch this video or my previous videos over and over again. Okay, you will learn this. I cover this concept in my training program. So if you're interested, just contact me through my website or whatever links you find on my channel. Just get in touch with me. I will get into your trading. I only do one-on-one coaching. I used to do group coaching before, but I only do one-on-one coaching because I feel every trader needs individual attention. Every trader has a different personality. So for me, one-on-one coaching suits well. So if you're interested, just let me know. This is the strategy I use. This is the strategy which is used by champions. If you look at people like David Ryan, Mark Minervini, they use the same trading methodology. Okay, so that was the stock NHPC, around 3 to 4% return in just a matter of 2 days. Fantastic. I hope this added some value to your trading. I hope you start using this system, and I hope you have good profits and good luck. Thank you so much.